Well, folks, do we have earnings results to discuss? Alibaba posted their second quarter earnings. Overall, I am very happy with their earnings. Again, I have quite a bit of money invested into Alibaba. It's one of my top positions by amount of money that I put into it. And basically, all you need to know is that Alibaba tops profit expectations, and they boosted their buyback program by 50%. And this is exactly what we're going to talk about today. So welcome back to another video. My name's Adam, and yes, we're going to be talking about Alibaba quarterly earnings results. Overall, I was very pleased with them. The market is, responding kind of flat. Alibaba is down a little bit in pre-market trading, just under that $200 level. I highly recommend you go on Alibaba's investor relations page and check out their June quarter 2021 results. And this is very important to understand if you're a long-term investor in Alibaba. But if you just want a screenshot of their earnings, yeah, Alibaba tops profit expectations. They boost their buyback program from 10 to 15 million dollars. Revenue came up a bit short of expectations, and growth was mainly driven by China and international retail, as well as their logistic network. So China basically has a hand in everything. You can pause this video. I talked about this little screenshot posted in the Discord group. By the way, if you'd like to check that out, it's a growing and thriving community of investors there. Alibaba basically has a hand in everything, all the way from, of course, logistics networks to online payments to cloud services to retail and e-commerce. So really, really cool. And let's take a look at their numbers. So net income was $7 billion US, which fell down slightly from a year prior. And Alibaba's revenue increased to 205.7 RMB. That's a different currency there. And the revenue growth was largely driven by the performance of commerce retail, as well as the momentum in the company's international retail and Kayano logistics business, according to the earnings release. So again, it's good that they're so spread out across so many industries. One, that means they're an integral company to the growth of the Chinese economy. This is one of the largest Chinese companies that trades overseas, okay? It's a $543 billion company. And I mean, if they were to quench Alibaba at the heart of many of their core businesses, that would not be good for the growth of China's economy, right? And we know that there's a lot of clampdown happening by the Communist Party on Chinese company. They recently eradicated a whole 100 billion private tutoring industry. But again, I think that they're trying to assuage investors and say, okay, hey, look, this is as far as we're going to go, and we're going to leave the market alone for some time. And the company generated this many billion in total commerce revenue, up 35% from a year earlier. Cloud computing revenue increased 29%. I actually expected cloud computing to increase more, but they actually lost a key internet cloud client. And what they said is that they're trying to diversify their cloud business going forward in terms of who they're marketing to. They saw about 1.18 billion annual active customers in the 12 months that ended June 30, making an increase of 45 million from the year prior. So that's not bad. And they boosted the share repurchase program from 15 billion to 10 billion. This program is Alibaba's largest in its history, and the company has repurchased about 3.7 billion of its American shares, depository shares, since April 1st. I think this is critical, and this keeps me wanting to buy more of Alibaba. 15 billion is nothing to scoff at. They're planning on purchasing that. I think they have like a 2-year program that they're planning to repurchase 15 billion worth of shares. This shows you that the company's management, one, is bullish on the long-term growth of the company, and two, think the shares are trading very cheap right now. And you can see, it's just under $200 a share, representing 543 billion market cap, with a price to earnings ratio of 23%, and they're growing revenue by 34% year over year. To me, that seems ridiculous. And again, I don't think China wants to quench top companies like Alibaba, which the Communist Party can see, look, like that comes out of basically our socialist communism type of structure here. So yeah, I think that Alibaba going forward is looking very cheap, and I'll just continue to buy more shares, especially if it's trading under $200 per share. Okay, and that's just my position. Okay, don't listen to me, but yeah. And Jack Ma's Ant Group sees profit slide 37% after regulatory setback. So of course, most of you should probably know that they axed the IPO of Ant Group, and Alibaba owns about 33% of the company. So that means that billionaire Jack Ma's fintech giant contributed nearly $696 million to Alibaba Group Holdings earnings. A company filing showed Tuesday. So again, and this is more of like a financial payments platform, like a fintech type industry. And because of the regulations set out by the Communist Party, the profits fell to 2.1 billion, which is still like pretty impressive to me. Yeah, like again, they just have a hand in everything, and fintech is growing, and that they still posted a 2.1 billion profit in the March quarter. That just shows you like what an outstanding company this is. So overall, I'm so happy with their earnings. And let's take a look at a lot of people viewing the company right now in Yahoo Finance. There's 109 people looking at Alibaba is quite a lot. And we'll see what happens to the company on market open at 9:30, I guess. But since I'm in Nova Scotia time, it's an hour late. So yeah, now we're going to take a look at what they're saying in their quarterly report. So again, their ecosystem reached 1.8 billion users, increase of 45 million. So it's good that they're growing pretty slowly in terms of their monthly active users, but still 1.18 billion out of like 8 billion people on the planet, like more than 1 in 8 people that they're reaching. So very, very cool. And they delivered strong revenue growth of 34% year over year, and they're purchasing their shares to 15 billion. Again, that's the main highlights right there. So revenue was $31.8 billion, increase of 34% year over year. And then they bought Sun Art. They talk about their consolidation of Sun Art there. And I'm noticing that what they're doing with their purchases and mergers, they're buying smaller companies to sort of get under the radar of, I think, their regulatory parties in China. Okay, and so they're trying to sort of go under the radar by buying smaller, less developed companies and then developing them into major revenue producers. And I think that's a really smart system. And that's just like from my observation there. Income from operations was US 4.8 billion, a decrease of 11% year over year. The year-over-year decrease were primarily due to her investments in strategic areas to capture incremental opportunities, such as community marketplaces, Taobao deals, local consumer services, and Lazada, as well as our increased spending on growth initiatives within China retail marketplaces, such as Idlefish and Live, to support to merchants. So basically, they're taking any extra incremental income and they're putting it right back in the business. And that's what I like about a company, is that they're taking the money and just making the money work for you. So I like buying into companies where I'm just sitting on this cash, I'm putting into the company, and they're just using that cash to do good and to increase their revenue in the company. So I just like that. And net income was close to $7 billion. And that was an increase of 10% year over year, mainly due to an increase in share of profit of equity method investees. Not really sure what that means actually. So if you would like to let me down below in the comment. And of course, don't forget to like the video as well. Diluted earnings was $2.54, an increase of 12% year over year. And net cash provided by operating activities was a decrease mainly due to the partial settlement in the amount of $1.4 billion in the fine levied earlier this year by China's administration to China's anti-monopoly law. So basically they were fined the largest fine ever because they participated in anti-competitive practices. So I think this is more of a slap on the wrist than like a long-term thing that you need to be worried about. Again, this just shows you their business and strategic updates. So good. They're expanding in basically all areas. Value for money, Toba Deals continues to experience robust user growth by providing consumers with more high quality, value for money products. So again, just amazing. Secondhand consumption using Idle Fish continues its robust growth, with monthly active users reaching over 100 million throughout the quarter. And through Idle Fish, users can find a variety of secondhand, recycled, refurbished, for rent, and vintage products. So again, really cool. Mid-year shopping festival encouraged and helped brands and merchants to launch new products. About 250,000 merchants and brands participated in this year's festivals, more than double from the number from last year. So again, so cool. I really like this. Sun.R, this is another exciting sort of subsidiary of Alibaba, and achieved 28% year-over-year growth in online orders with shared inventory initiative, etc. Sun.R has stores in 235 cities across 29 provinces in China, which is supported by expertise in building strong regional procurement and supply chains in perishables. So I love how they're building out their business and expanding into basically all areas. You know, it started with sort of e-commerce and retail, and now it's going into like cloud computing, into logistics networks. So this is their logistics network, Kainao. I'm sorry if I'm pronouncing that wrong. Improving efficiency across the Alibaba ecosystem and logistics industry in China and internationally. And right now, if you don't know, we're in a major supply shortage where the beneficiaries of that are logistics networks and transporting things from one place to another. And their network continued to expand both its domestic services and global smart logistics networks by deepening integration with logistic partners, as well as offering more products and services, increasing merchant adoption of fulfilled by Kainao services on our fast-growing cross-border businesses, including AliExpress and Tmall Global, drove Kainao's network's solid revenue growth of 50% year over year during the June quarter. We have also seen fast development of their network domestic business. For example, users are increasingly adopting Guaiju, our crowdsourced delivery platform, with the number of orders in June quarter growing 63% year over year. So this is really exciting when it comes to their logistics network. And this is what I mean. Like, some of their segments are growing at a tremendous clip. They have international, consistent, strong growth through Lazada. I mean, the names that they have are like so hard to pronounce. I'm sorry for mispronouncing all of these, but yeah. And they had 90% year over year order growth in the quarter. Investment in technologies to improve user experience and recommendations on its mobile app have increased stickiness, as evidenced by improving frequency of visits by users for the last 6 consecutive quarters. Cloud computing was only 29%. And again, like I said, primarily driven by robust growth in revenue for customers in the internet, financial services, and retail industry. Year-on-year growth began to moderate. And I mean, 29% is just moderate growth for them because of revenue decline from a top cloud customer in the internet industry that has stopped using our overseas cloud services with respect to their international business due to non-product related requirements. So again, going forward, we believe that our cloud computing revenue will be further diversified across customers and industries. So just really cool. They're expanding their network tremendously, and I love that. And then they have Ding Talk right here. Like, you can read about that. And it's just like, I just love all of these announcements here. And I don't really care that their income from operation is down 11% from the year prior. Okay, I'd much rather have them invest back into the business to grow more in the future. Okay, so I'm in this for the long term, and I really like the way that Alibaba is going and expanding into key markets and just making these very successful acquisitions. So yeah, I really like what I'm seeing here. And again, I'd highly recommend you read this news press release from Alibaba and just check them out. But yeah, if you enjoy this video, please be sure to like, subscribe if you haven't already, and join the Discord group, as well as check out the links down below. I'll be holding all my 13 shares in Alibaba. So cheers, guys. Have a fantastic day. I love you all, and I'll see you in the next one.